What does a weaker than expected outlook mean for this chipmaker in first quarter? Advanced Micro Devices produces essential GPUs for training and deploying generative AI models. The company's forecast was pushed higher for first quarter, but Wall Street expected more. Despite disappointing earnings, AMD stock appears to have much more upside ahead as it battles rivals. Let's dive in. AMD stock analysis. Is the chipmaker a buy after weak outlook? Yes. Welcome to Timely Investment Research. Advanced Micro Devices recently reported its fourth quarter earnings, and shares dipped following the results. The company met expectations with its report, but the company's management team did put forward a first quarter forecast that trailed behind Wall Street expectations. This has important implications for AMD stock investors. Despite growing AI chip sales, AMD stock fell as much as 6% in the most recent session following these results. Notably, AMD did see its stock price pair those gains in intraday trading, but investors are clearly focused on where the puck is headed with this company over what it's done in the past. The company's fourth quarter results showed an adjusted 77 cents in non-generally accepted accounting principles earnings per share. Thus, the question many investors have now is whether AMD is sandbagging its results or if Wall Street is getting too optimistic. Let's dive into what to make of these numbers and what AMD's outlook is moving forward. AMD's core servers and PC CPUs business has remained unchanged since the pandemic. Despite recent tweaks, gaming segment sales decreased 17%, and embedded segment revenue was down 24% year over year. Areas of weakness. The customizable chip market struggled, with AMD opening curtains to a 24% drop in fourth quarter embedded segment revenue. It was equivalent to $1.1 billion. Intel clarified programmable chip inventories, expecting the trend to linger in the year's first half. AMD's gaming segment, peaking from Microsoft's Xbox and Sony's PlayStation 5 design, contracted 17% to $1.4 billion. Console revenue, a key alongside PC graphic cards, usually reaches its peak 4 years post new system launches. In fourth quarter, the company's client segment climbed 62% to $1.5 billion, showing a post-pandemic return to seasonal PC chip buying. A possible market growth is causing a stir in 2024, with demand driven by AI-enabled computers. Fourth quarter revenue was $6.17 billion, past the estimates of 77 cents per share. Focusing on AI update. Susquehanna analyst Christopher Rolland reiterated his favor on AMD, upping his price target to $210 from $170. Investors were skittish for updates on MI300 guidance from AMD, waiting with bated breath whether the company met expectations. Rolland forecasted data center revenue to come in at a hefty $6 billion this year, expecting AMD's to increase its guidance of $3 billion. AMD stock is still a buy. Despite these disappointing results, I think there's still a lot to like about AMD's positioning right now. The company's Ryzen 7000 processors, equipped with Ryzen AI on-chip accelerators, surged in terms of sales. This segment benefited from returning demand and a normalizing PC market inventory. AMD's client segment profit was 10%, mirroring effective cost management and improved consumer market revenues. Overall, if AMD continues to make progress in its key growth segments and continues to see more AI-related market share, this is a company with a valuation that still has room to go. Compared to peers, AMD is actually the relatively favorable bet from a valuation standpoint. That means something for many value-conscious growth investors. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.